If investors only looked at the price of oil at the end of this week, they wouldn't have known that Israel and Iran, OPEC's third-largest crude producer, briefly stood on the brink of an unprecedented war. U.S. crude oil and global benchmark Brent finished out the week about 3% lower, despite the fact that Iran and Israel traded direct strikes against each other's territory for the first time. Fears that oil prices could shoot to $100 a barrel or above did not materialize. In fact, U.S. oil futures closed Friday at $83.14 a barrel, which was the lowest settlement price since late March, days before the current spiral of escalation began with Israel's strike on an Iranian diplomatic compound in Damascus, Syria on April 1. Futures fell for 3 days following Iran's missile and drone barrage against Israel last weekend, and prices settled only slightly higher after Israel struck back on Friday. Investors seem to believe that Israel's limited retaliatory strike, which does not appear to have caused any significant damage or casualties, provided Iran with an off-ramp to refrain from counterattacking. The market has essentially erased the risk premium associated with the Iran-Israel tensions after traders bid up prices last week on war fears. Traders aren't buying that either Israel or Iran is actually interested in escalating the tensions and are merely engaged in largely symbolic, face-saving exercises, said Manish Raj, managing director at Velandara Energy Partners. These skirmishes did not impress the oil markets, which believe that no disruption to oil flows will occur. Oil markets were most worried about Israel striking one of Iran's nuclear facilities, which would have required Tehran to hit back, according John Kilduff, founding partner at Again Capital. International pressure on Israel to demonstrate restraint appears to have paid off. The International Atomic Energy Agency confirmed Friday there was no damage to Iran's nuclear sites. We are therefore ready to cautiously conclude that the cycle of escalation between Israel and Iran is over, at least as far as direct attacks against each other are involved, Marko Papic, chief strategist at the Clocktower Group, told clients in a Friday note. Papic said a sustained war between Israel and Iran is difficult to imagine and may even be practically impossible. The two countries are separated by considerable distances given the power projection capabilities of their militaries, Papic told clients. As such, Israel's limited response to Iran may not be merely a diplomatic choice due to U.S. pressure. Instead, it may be a function of material constraints as well. Kilduff told CNBC's Squawk Box on Friday that the bar is very high in the Middle East for all-out war to break out, choking off oil supplies. Over the years, really the decades now, these attacks come, they are dealt with, they are handled diplomatically, and we don't lose any barrels of oil, Kilduff said.